Hello everyone. In this class, I am going to solve a problem that is related to interstate transactions and GST set-off rules. In the last class, I explained GST set-off rules. Please watch that class first and then proceed with this one. Now, we will see the problem. Record necessary journal entries in the books of Suman of Bihar, assuming CGST at 9% and SGST at 9%. First one, bought goods rupees 3,50,000 from Jharkhand. From Jharkhand means Bihar and Jharkhand, they are the different states. The business of Bihar, they purchased or bought the goods from Jharkhand means this transaction falls under interstate. Next one, second one, sold goods for rupees 2 lakh to Uttar Pradesh. See here, the business of Bihar, they sold the goods to Uttar Pradesh. Means here also different states. Means this transaction also falls under interstate. Third one, sold goods for rupees 4 lakh locally. Here they said locally means within Bihar only. They sold the goods within the Bihar. So this transaction falls under intra-state. Next one, paid insurance premium, that is rupees 30,000 means paid the insurance premium in Bihar. So this is also intra-state transaction. Next one, fifth one, bought furniture for office, that is rupees 50,000. For office means Bihar. In Bihar, they bought the furniture for office, that is rupees 50,000. So it is also falls under intrastate transaction. Now we will solve the problem. See here, this is the format of journal, books of Suman, journal, date, particulars, ledger folio, debit amount and credit amount. So our first transaction, that is bought goods rupees 3,50,000 from Jharkhand. So this is the transaction that falls under interstate. So now what is the journal entry? The journal entry for interstate transaction, that is purchase of goods from Jharkhand, is purchases account debtor input IGST. Why? Because purchased goods from Jharkhand to bank account or cash account to bank account. Purchases, the value of goods, that is rupees 3,50,000. 3,50,000 and input IGST. See here, CGST at 9% and SGST at 9% means we need to add, that is CGST plus SGST, that is 18% will come. So input IGST, that is 3,50,000 into 18%, that is rupees 63,000. That is the amount of input IGST, and to bank account, that is rupees 3,50,000 plus 63,000, that is equals to rupees 4,13,000. Now we will write down the narration. Being goods bought or purchased. Now what is the next step? We need to underline only the particular column. Second entry, see, sold goods for rupees 2 lakh to Uttar Pradesh. Means Bihar, the business of Bihar, they sold the goods for rupees 2 lakh to Uttar Pradesh. Means this is the transaction that falls under interstate. Now what is the journal entry for sale under interstate transaction? The entry is bank account debtor to sales account to output IGST account. See here we can write cash also. In the first entry means in purchases we have written that is to bank account. So in the second entry also you have to write down bank account. To sales account, to output IGST account. So now first we have to write the value of sale of goods, that is rupees 2 lakh. And output IGST 2 lakh into 18%, that is rupees 36,000. Means bank account, that is rupees 2 lakh 36,000. So being goods sold outside the state. Being goods sold outside the state. Okay. Here we can write debtors account also. Bank account or debtors account or cash account. Next one, third entry, that is sold goods for rupees 4 lakh locally. Rupees 4 lakh locally means what? Intrastate transactions. Sold goods for rupees 4 lakh locally, that is intrastate transactions. See, here we will assume the sold goods on credit. In this transaction, we will assume the goods sold on credit. So, the entry is debtors account debit to sales account to output CGST account and SGST account. Why? Because this transaction falls under intrastate to output SGST account. So the sale value, that is rupees 4 lakh. And 4 lakh into 9%. See here. CGST 9% and SGST 9%. That is 36,000 and 36,000. So 4 lakh plus 36,000 plus 36,000. That is 4 lakh 72,000. Being goods sold on credit locally. Now next transaction is paid insurance premium of rupees 30,000. Paid insurance premium in Bihar means this is intrastate transaction. So the entry for expenses means insurance premium, that is fourth one. Insurance premium account debtor input CGST account debtor input SGST account debtor to bank account. So insurance premium, that is rupees 30,000. And input CGST 30,000 into 9%, that is rupees 2,700. Input SGST also 2,700. So totally 30,000 plus 2,700 plus 2,700, that is rupees 35,400. Being insurance premium paid. Date, particulars, LF, debit, that is rupees, and credit amount. Rupees. Bought furniture for office rupees 50,000. Bought furniture for office rupees 50,000. That is in Bihar. Bought furniture for office of Bihar, that is rupees 50,000, means this is intrastate transaction. So the entry is furniture account debtor, input CGST account debtor, input SGST account debtor to bank account. Value of furniture rupees 50,000. Input CGST account 4,500. Input SGST account 4,500. So bank balance, that is 59,000. Being furniture bought. Now after passing these journal entries, we have to calculate the net amount of GST that is payable to the government. So how we have to calculate the net amount of GST that is payable to the government? See, calculation of net amount of GST payable to the government. First, what we need to find out? First, we have to find out the total GST liability. Total GST liability means we have to find out what is the total output IGST, output CGST and output SGST. So here GST liability, output IGST equals to, see, output IGST. See, in the second transaction, that is sold goods for rupees 2 lakh to Uttar Pradesh. See here. So the output IGST, that is rupees 36,000, means the amount of rupees 36,000 collected from the customers. Business has collected the amount of rupees 36,000 from the customers. But this IGST amount, that is rupees 36,000, it is not belong to the business. So business has to pay the amount of rupees 36,000 to the government. Okay. See here. So output IGST, that is rupees 36,000 and output CGST. Output CGST, output SGST. Output CGST is third entry here. Sold goods for rupees 4 lakh locally. So output CGST, that is also rupees 36,000, and output SGST, that is also rupees 36,000. 36,000. See here. Now we have to find out the total input GST. Input GST. Input GST means what? The GST that is paid on purchases. Here we have to utilize this input GST to set off against the output GST. Means we have already paid the tax on purchases, and again we need not to pay the full amount of tax to the government. So that we have to use the input GST to set off against output GST, and net balance we need to pay to the government. So input GST is input IGST equals to, see, input IGST means they paid on purchases, that is rupees 63,000. 63,000 and input CGST, input SGST, that is equals to input CGST, that is rupees 2,700 under insurance premium, rupees 2,700, and here bought furniture, that is input CGST, and SGST, that is rupees 4,500. So input CGST is 2,700 plus 4,500. Here also 2,700 plus 4,500, that is equals to rupees 7,200. Okay, this is the information related to output GST and input GST. Now we have to apply the set of rules. First one IGST, CGST and SGST. See, once I will explain the set of rules. See here IGST, input tax credit, is utilized first against IGST liability and then against CGST and SGST. And CGST ITC means input tax credit can be used only against CGST, first against CGST and IGST, and not SGST. And SGST ITC can be used only against SGST and IGST, not CGST. This is the rule of set off, GST set off rules. Now we will solve the problem. See, first one, output IGST, output IGST. that is rupees 36,000. Sorry, output we can write output GST. That is IGST is 36,000 and CGST is also 36,000 and SGST also 36,000. Next, what is the next step? We have to see the input IGST. The available input IGST is means what? We have already paid the tax on purchases. That is rupees 63,000. So, less input IGST, that is rupees 63,000. 63,000 means what? We have collected from the customers, that is rupees 36,000 we need to pay to the government. But here on purchases, we have already paid the amount of rupees 63,000. Means this is 63,000 that is greater than 36,000. Means here we need not to pay any tax to the government. Here we have already paid the tax of rupees 63,000. So remaining input IGST is remaining balance, that is 36,000 minus 63,000, that is equals to rupees 27,000. Fine. Now the available means remaining input IGST, that is rupees 27,000. Here we can use this 27,000 to set off against CGST and SGST. Before that, first we have to solve the journal entry for this one, that is set off of output IGST. So the entry is for input adjustment, input tax credit adjustments, output GST account debtor to input GST account. Now we will write down the journal entry. That is sixth one is output IGST account debtor to input IGST account. See, in this we have set off the entire 36,000 rupees. Means we need not to pay any tax to the government. Here we have already paid rupees 36,000 on purchases. That is rupees 36,000. Being set off against IGST output made. Okay, now what we have to do, see the remaining input IGST is rupees 27,000. Here we can utilize this remaining IGST against CGST and SGST. Now what is the output GST of central government? That is rupees 36,000. That is rupees 36,000 and available input CGST is rupees 7,200. And here we have the remaining balance of IGST also, input IGST also. Okay, so what we have to do, first we will set off that is rupees 27,000. 27,000. Here it is nil. 27,000. So 36,000 minus 27,000, that is rupees 9,000. So here we have used the entire amount of input IGST, that is rupees 27,000 against CGST. that is rupees 27,000. So remaining output CGST is rupees 9,000. But we have here input CGST of rupees 7,200. We can use this amount of 7,200 to set off against output CGST, that is rupees 7,200. So 9,000 minus 7,200, that is rupees 1,800. See here we are not able to set off the entire 9,000 rupees because we have paid only rupees 7,200 on purchases. So now what is the amount, net GST amount that we have to pay to the government? That is rupees 1,800. 1,800 we need to pay to the government. That is the net amount of GST, CGST that is payable to the government, that is rupees 1,800. Now we will pass the journal entry for this. First we have to pass the journal entry only for set off, and after that we will pass the journal entry for payment of GST to the government. So first one, that is output CGST account debtor to input CGST account and to input IGST account. We have utilized input IGST account also. So that is rupees 27,000. We have utilized rupees 27,000. That is remaining balance of IGST. That is rupees 27,000. And we have utilized input CGST of rupees 7,200. So total, that is rupees 34,200, means our output CGST is rupees 36,000. So the remaining balance of rupees 1,800 we need to pay to the government. For this I will pass the journal entry later. Now we will see the set off of output SGST. See here, output SGST, the available input SGST means paid on purchase, that is rupees 7,200. So we will use the input SGST to be set off against output SGST. 36,000 minus 7,200, that is rupees 28,800. Means we have paid only rupees 7,200 on purchases. So remaining amount of rupees 28,800 we have to pay to the government. This is the net GST, net SGST that is payable to the government. That is rupees 28,800. Now we will pass the journal entry for the SGST. Okay, here we have to write the narration, right? Being set off against CGST output. Now the journal entry that is related to set off of SGST. Output SGST account debtor to input SGST account, that is rupees, see here, 7,200. Being set off against SGST output. Now our last entry that is related to net payment of or final payment of GST to the government. That is rupees 28,800 and 1,800 means 28,800 plus 1,800, that is rupees 30,600. 30,600 amount we need to pay to the government. So the entry is 9th one. See here, in IGST, here we need not to pay any tax to the government because we have already paid the amount of 36,000 on purchases. But under CGST, we have to pay rupees 1,800 to the government. See here, the output CGST is rupees 36,000 and we have used input IGST of rupees 27,000 and input CGST, that is rupees 7,200. Means 27,000 plus 7,200 means 34,200 the tax we paid on purchases. But here the output GST is 36,000 means rupees 1,800 we need to pay to the government. And here SGST, in the total output SGST is 36,000 but the tax paid on purchases, that is rupees 7,200 means 28,800 rupees we need to pay to the government. So here only CGST and SGST tax we need to pay to the government and not IGST because we have already paid the tax on purchases. Output CGST account debtor, output SGST account debtor to electronic cash ledger account. Output CGST how much? 1,800 and output SGST 28,800. That is rupees 30,600. We need to pay to the government of rupees 30,600. See here, 30,600 being final payment made. Okay, so these are the journal entries we need to pass under interstate transactions and under GST Setoff. I hope this example is clear to you all. Okay, if not, please leave a comment. Thank you.